In the currency quadrant, the euro is down again. Euro heads lower today. That is now 6 of the last 7 sessions, down 2 weeks in a row and down 4 of the last 5 months, clearly under pressure versus the majors, specifically the US dollar. That's what the future is pegged against. All the major currencies against the US dollar really have been collapsing for most of the last 6 to 8 months, but the euro is now down to levels that we have not seen since the beginning of October and seems to be pushing lower, although it was on a little bit less volume. CPI came in stronger, which is interesting because it wasn't a strong set of numbers at all, but it was stronger than expected and didn't really put much of a bid into the euro at all. We had the core come in at 1.3. That's up 1.3 versus an expectation of 1.2. The month over month figures came in at down 0.3, but it was expected at down 0.4. And the year over year is now listed at 1%. That's plus 1% versus an expectation of 0.9. So nothing earth shattering, but a little stronger. Clearly not enough to affect what is expected to be more stimulus. The market is calling and looking for stimulus from the ECB or the individual EU governments, or potentially both, and they're not getting it, which is why the euro continues to sort of weaken. You're not expected to see inflation move up without any more stimulus. If there was more monetary policy stimulus, the euro should initially weaken as well, so that'd be more supply in euro. But if you got fiscal stimulus, you could potentially see the euro rebound. We're not seeing either, and we've got a Christine Lagarde testimony before Parliament next week. That's the EU Parliament. So we'll see if she pushes harder, as she did in her first speech last week, to get some of these EU governments to put forth fiscal stimulus. That could stabilize the euro, but right now it just continues to tread water and head lower.